Okay, guys, good morning to you. Today is the 27th November 2025. CRAZII Global Market Talk with KEL. Crazy anytime, anywhere. Now, today, the session a bit different. We are not going to talk too much on the market today because the US market is closed. So, let me just mute everybody first, yeah? Okay. Point to you, Shafiq. I just happened to have a glimpse of you as well. Okay, pretty cool. All right. Okay. So thanks a lot for coming in. Okay, so today I got something to share with you is the financial market. I think that we need to be very careful next week. All right, especially after Thanksgiving. Yeah. I kind of feel that the market is preparing for a bigger movement very soon for next week, though. Please listen to me. All right, but before that, disclaimer apply as usual. As always, do your risk management. Okay, so let's look at some of the very important fundamental for today first. Okay. Now, first of all, the Thanksgiving, okay? Stocks locked in the fourth day of gains ahead of Thanksgiving as tech rebound. So it's very typical for US to buy ahead of Thanksgiving. US is a very simple market that if you really want to have a sure win trade over a period of time, you just look out for all the seasonality. Whereby whenever there's a season coming in, like Christmas, like this Thanksgiving, President Day, 4th of July, all these are the typical buy day. Now, of course, not 100%, but if you look at it at an overall aspect, it's about 80 to 90%. Okay, so that's why the market yesterday rebounded pretty strongly for the US market. All right, so the thing is this right now, the Dow Jones up by 314 points last night, and both Nasdaq and S&P up by 0.69 to 0.82% respectively. Okay, now there's something very, very interesting. It's about Oracle. Now, I'm bring Oracle in. Just give me a minute. Let me see. I can bring the chart in and out. Yeah. This is a very interesting about Oracle. Yeah. I just want to show to you. Just give me a while. Yeah. I've forgotten to bring the chart out earlier. Apology. Now, take a look at Oracle. Now, Oracle shares has dropped from the $331. It dropped all the way to $204. Okay. Now, market don't come down by just by luck. Okay? It happened for a reason. And you can see that the current price to earning ratio is 27 forward time. Okay, but the thing is this market analysis thinks that this company will do well, and the dividend itself was not too bad. But I will share a story with you later on. Yeah. So basically now people are buying into Oracle thinking that it's cheap, but there's something that is actually on the other side of Oracle that I'll share with you later on. Okay. And of course, the Nvidia is up by 1% as usual. It's pushing up as it is. And of course, we also saw the S&P 500 basically moving up a little bit. And overall, Alphabet continue go new high. All right, because of Meta platform considering the use of the Google parent TPU chip in 2027. But of course, the Nvidia shares came off a little bit because of that. Yeah. Okay. Now, everybody is pricing in a 80% of a rate cut in December, 80%. Now, if the Federal Reserve disappoint you, you can get a sell-off. That is, I think it will happen. So what I believe will be happening next week is that the market will start to tell you that there will be no rate cut. And then everybody will start to sell, 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 sell. Okay? Then after that, okay, as usual, after that, the market will panic. And then after that, there will be a base, a support. And then after that, the market will cripple a little bit and then fly up for Christmas. So which means that next week, all right, next week itself will be like 30th. All right, next week onwards, all right, or 30 is, let me double check, yeah, it should be the first, yeah, sorry. Okay, now. Let me just go back. So 0, 1, 12. I think the market in general will pull back to somewhere around 4th to 5th of December, somewhere around there. Then after that, form a base. And then after that, the market will slowly rebound and slowly go up for Christmas. Okay, so this is my personal take that will happen to the global stock market. But of course, this is my personal take. But based on my personal experience in the market for so many years, I kind of believe that this will likely be happening. So let's see whether would I be right or wrong. Yeah. Okay. All right. So with that as an understanding, okay, do note today is Thanksgiving, so market will be closed, and tomorrow it will be shortened, meaning tomorrow will end early. So about 1 a.m. Singapore time, Vietnam time, about 12, the market will start to slow down, yeah, for tomorrow market. Okay, so all take note for that. Okay, so that is the US market for that at the moment. The next thing I'll talk about is Australia. Now, Australia consumer inflation has accelerated to 3.8%. Wow, that is very high. So that again tell you that global inflation is going to hit the whole world. Now, I'm very, very optimistic to tell you that we're going to see high inflation next year. Okay. Now, I am basically not going to mince my words. I believe that next year, if you don't make extra money for yourself, you're going to pay the price. You need to have extra income if not going to pay the price. Okay, that's very, very important. And of course, now the foreign investors warm to China cheaper AI valuation despite the fear of US bubble. Because AI now is still the darling, and everybody realized that US is paying, even to buy for AI is too expensive. So a lot of people now is going towards the AI with China because it's a fraction of the cost itself. And today there's no news except for about 11 o'clock. The new home sales doesn't really matter. And then tomorrow, okay, tomorrow we have a early close. All right, nothing much serious for today and tomorrow. So with that, we do expect a bit of profit taking later on in the afternoon. Yeah. Okay, so now I'll bring you is this. This is the US 10-year bond market, 10-year yield. So you can see why am I saying that next week there could be a rebound, because you can see every time when this particular 10-year yield drops to the Williams indicator at about 14%, you always will see a rebound. And the rebound is always the same thing over and over again, that they'll tell you, okay, there'll be no rate cut, blah, 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 blah. That means that the news, the media will always come in and tell you there'll be no rate cut whenever the thing comes down. Then after that, the market goes up, and then the rate cut comes in. So you understand my point? So it's a very, very typical thing that the US do on a very periodic basis. But because people have short-term memory, right, people cannot remember. Okay? So that's something that I want you to take note. Okay. All right. The other thing I want you to take note is the VIX. Something very important on the VIX side. Where's my VIX on? Okay. Now this is VIX. And VIX has traveled down from 27 all the way down to 17 yesterday. And the thing is this, as what I just said again, when the VIX come down very strongly and hit the bottom, and happen again, hit the bottom, usually there will be a pullback. And then pullback is usually accompanied with the interest rate factor. So that's why it's a very, very high chance, in my opinion, that next week or today, plus Monday, the stock market will pull back. The stock market will pull back. So it's about magnitude. If you ask me, it's about basically 2% to 3% pullback magnitude. That means that the stock market will pull back something of this magnitude. Now, will gold price be affected? Yes, gold price will be affected. Yeah. So that's why I want you to stay tuned with me the next few days and stay, because this sort of thing doesn't come every time. And when it comes, there's a lot of money to be made. So that's why I want you to stay with me. Okay, all clear? All right, so this is something that you can consider to your assessment and stuff like that. Yeah. Now, the last time we see something of significant is something like here back in February, where the VIX shoot up quite a fair bit. Yeah, let me just put a chart for you. This is what happened. I'm going to just do one more liner for you then as well. So if you look at this chart right now, Okay, so we have the market coming down quite a fast speed, and you can see this happening over here. Change the color. Today is not the best color. Over here. All right. So I believe the next 5 to 10 days there will be a bit of pullback in the financial market. Yeah. So traders, just take a look on this and put us on standby mode. Okay. Okay. So that is the data from the fundamental side. Now I want to bring you this my personal crazy.com Twitter or X. I want to show something very, very important. Yeah. Now one thing to note is that, right? Okay, the market leverage, which is called the margin debt, is really going crazy. The total margin debt has spiked plus another $57 billion to $1.2 trillion, the highest ever in the market. So what does it actually mean? That means that people are basically borrowing a lot of money to buy shares. And not only they buy shares, they leverage it up. So which means that, example, right? They have $10,000. If you buy 10,000 worth of shares, that's 1-to-1. If you have $10,000, you 1-to-10, you can buy up to 100,000 worth of shares. That's called 10 times. If you do 20 times, for $10,000, you buy 20,000. You buy 20,000 of shares, 200,000 of shares. So when you do that and the share price goes up, you make a lot of money, right? But at the same time, if you actually have the market pulling back, then the selling can be catastrophic. So let's take a look here as everyone. Let's just be very objective here. Yeah. Every time when this type of thing go crazy, people will tell me that, KEL, you are too negative, blah, blah, blah. But you can see that it is nuts. We're now at $1.18 trillion worth, okay, of shares at highest leverage. So the moment the market pulls back of a certain magnitude, the selling will not be small. It'll be at least 5 to 10%. So I kind of guess that basically now there's no choice because the US dollar is depreciating in value. A lot of people doesn't want to put their money in the bank. They don't trust the bank. So they rather buy in the shares. And as long as the share market keep on going higher, it's fine. But the thing is this, like what we always say, no matter how good the party is, you still need to go home, right? You need to have the chicken back to roost. So that is whereby we can see right now the index fund, the ETFs are buying a lot. They keep on buy. It's just like buy off tomorrow. So all I can tell myself is that I need to just be very, very careful because now the cash level of the US equity mutual funds are very, very low. They raised basically all into the US market. So that's why US market, you can see that it keep on pushing up. But there will be that point whereby the thing will just have to come down. Okay, so traders, you just be careful on this. I'll cover more in details in a video if I can have some time. I'm very tight in my schedule over here, but I'll do my best. Okay. All right. So if you want to learn more, you can go to my Twitter and come in and learn. Okay. But you can see now the people who are the spending power for Americans are very low right now. The affordability is also really, really low. People cannot afford more funds keep on pumping into the market. Very scary. Yeah. Okay, so why I'm bringing Oracle? Let me bring Oracle news, yeah? Go on, yeah? Now, this is a very interesting chart because Michael Burry recently just said that Cisco, if you know Cisco about 25 years ago, the chart of Cisco and the chart of NVIDIA is a little bit similar, which I think a little bit, yeah, a little bit. So if Cisco is to plunge, oh my God, NVIDIA will go crazy, but I don't think so. I think maybe a 10%, 20% yes, but not a full thing, yeah? Okay, let me bring you about this. This is a very interesting chart. I want you to take a look here today. Can you see this is the unemployment level versus the indicator? Okay, so you can see that almost every time when the unemployment levels are turning up, we cannot deny that there will be a recession. And you can really see that this indicator is very powerful because it gives a 50% mark. Whenever the unemployment data starts to creep up and is past the 50% marker, you can see that almost 100%, if not 100%, that there will be a recession. And I think there will be a recession very soon. Maybe next year, maybe the following year, but definitely we're around the corner. Okay, so that is the reason why we need to be very careful when it comes to trading for next year. We also need to prepare ourselves for the big thing. Yeah. Okay, Oracle. Let me just read Oracle first. Now, Oracle is a very interesting thing because you know that the second richest man is actually Larry Ellison. And now apparently his company, that is the share price is coming down. Remember I told you the share price is coming down, right? Now shares don't come up by itself. There must be some reason. Apparently now people are buying a CDS against it, meaning that they are buying a insurance against Oracle and betting that Oracle cannot pay their debts. And of course, if the thing really happened, then of course Oracle will be in serious trouble. So the people are buying is quite a fair bit. Since 2025, people have been buying a lot of this share of this CDS against Oracle. And of course, we all know that if Oracle, if they buy this, it's because they're paying premium for that. And if they buy this, it's because they are very worried of the company. And since the mid of the year, they've been buying, and it only accelerated recently. So that tells you why the market is selling off quite a fair bit. Now, if you look at it for a share price, I think if Oracle is continue to go down, we can see $117. Okay. So traders, if you want to buy some Oracle, maybe wait for it to go down further, 175, maybe you can try a little dip. But if you want to look at it itself, right, maybe you can try 155. Okay. Now, I don't think you should buy when you have such a huge amount of people betting against you. Okay, especially for Oracle. Yeah, it's not nice. And of course, if Oracle starts to come down, the rest will follow. Okay. So today we have a lot of fundamental because today US holiday. We don't want to go too much into this. Okay, now I'm going to try to go to Zoom. I hope it works. If it doesn't work, we end the session today. Yeah. Okay. Okay, so today this is gold seemingly stabilizing. Okay. Oh, it's so difficult, yeah. Okay, so the thing is this gold today it is coming down as you can see right now. Gold today MLP is at 41.47. I think it will touch that. This morning it missed the MLP by a little bit and then rebounded. I think gold will go there and touch it. Now, if gold touches it and rebound, that will be a good time to buy some gold. If gold touches it and goes down below MLP, then don't bother. Okay. Now, based on the chart, the gold chart looks all okay. The KSI is green, the KCX is black, everything looks good, and it's coming down right now. It should be able to touch the MLP. And once it touches that and rebound, okay, traders can go in to buy back your short position and also try to see whether can you look for the upside. Yeah? Now, if gold is to go up today, gold should be going up to 41.97, which is the pivot one. Okay, so overall, if you ask me, gold has been coming down the last few days, and this is a typical elephant trade setup. And the KSI has been green all the way. So let me just give you a very simple Thanksgiving gift. So based on the chart coming down this way and the KSI being green all the way, by right, the market should go back to here again. So 42.30 is where the gold can be going in the near term. So if gold basically stabilize and move up, gold can go all the way back to 42.30 in the near term. All right. So, but of course you say, well, KEL, didn't you just said that the market there'll be no rate cut? If we don't no rate cut, then of course gold will come down, right? Yeah, that is the other side of it itself. So let's say they cut, they set a cut, then of course gold will fly up, right? So that's why to me it's a very simple strategy. Above OP, I will buy gold. Below OP, I will not sell gold or sell very little bit just for daily bread. But once it stays above OP, I will buy gold and my TP level will still be placed at 42.30. Of course, in between the days, I'll take some TP to make some money for myself. But the overall target is 4230. To be precise, the gold target should be 4245. Okay, 4245. By right should be 4245. Okay, but I give you 4230 first. Let's live with 4230 first. Then after that, if the gold can go higher, then 4245. Okay. So this is something that I want to share with you for Thanksgiving, and I hope that you can make some money out of this. All right. So this is a long-term position trade on gold. Okay, long-term, because of an elephant trade. Okay, now I'm going to do something scary. I'm going to just switch my screen right now to the Dow Jones chart. Hopefully, it doesn't crash. The last time we did this, it did crash. So let's see today, is it better? Oh, it didn't. Today's a good thing. Okay, all right. Let's see what happened, yeah? Okay, now this is the Dow Jones, and this is the opposite of gold. Can you see that? The market on the Dow went down first, that's fine. But recently, the market goes up, but the KSI retained the rate. Oh dear. Okay, so that what does it mean? That means that this is an elephant trade on the reverse side, whereby the smart money are selling, but the market is pushing up. So the last 2 days, when you buy small because the KSI is red. Today, as long as the market is still above OP, you can still buy small. But if today, if the market turns to red candle the next few days and start to sell, then there's a very high chance that the market can come down, as what I told you. And the downside this time around can be how much? Let's take a look. The downside can be as low as on air 45,757. Oh my God. 45,757. Where are we right now? 47,464. We are talking about a catastrophic sell-off of nearly 1,700 points. Oh my God. Do you think it's possible? I think it is possible. Imagine that if the Federal Reserve decided not to cut interest rate, oh my goodness, this will lead to a big sell-off in the financial market. Then, of course, gold will it come down? Yes, gold will come down because gold is being brought up recently because they expect to be a rate cut. So that is something that you must be so very careful, yeah? So let's see how it goes in fundamental. If the market believes that there will be no rate cut, the market will sell. But if the market believes the rate cut will happen and it happened, then okay, fine, then everything will be just as per normal, good, all are happy. Okay? So if you ask me personally, from the VIX indicator to the interest rate in the 10-year yield, and now that I see the KSI is selling like this, I kind of feel that I'll prefer to sell the US market, right? Now, the gold price itself, right, sometimes it can go inversal. People may think that, okay, it's time to be safer. All right, they may do that. So what I think the Federal Reserve may do is that to make everybody happy, they'll just basically say, okay, we have a rate cut of 0.25%, but that's it. So you get a rate cut as what you're supposed to get, but the market pull back because the market realizes that there's no more rate cut after that. So it's something that is in the middle of the two evil, just to make sure that everybody's happy. Okay, so this is how I see the Dow Jones. So if you agree with me, we can try on that together. The last one, I try my luck now. I try the Bitcoin. Okay, I just try my luck. In Singapore, when we do this sort of thing, we can pull the chart anytime. Very simple, right? Here, really must try a bit luck. Yeah, see whether the connectivity allows that, and not every time can allow. Okay. Oh no. Okay, didn't allow this time around. Let's try again. Yeah, I had to really get pinpoint and then get the data in, and okay, this time around maybe can. Let's take a look. Yes. Okay, guys, we have the Bitcoin, and the Bitcoin is showing me something interesting. We have a blue diamond forming, not yet finished yet, and the KSI is green. I was telling people in preview, I said that the Bitcoin is to go up. Bitcoin has to stay up above 90,000, and the first target they can go for will be 93,000. Okay, so this is the upside of Bitcoin, yeah? Now, if the Bitcoin do come down, the 88,000 will be a very strong base for MLP. And of course, if the selling comes in, it can look terrible. Okay, so now at the moment now, Bitcoin looks okay. I still prefer the Bitcoin to come back down. I'm still waiting at 79,000. So upside wise is 93,000, downside wise is 79,000. So up to you traders, which side do you think it will go? Well, based on the chart wise, it seems that it should be going higher, yeah, based on the chart. Okay. So let's take a look and we see how it goes in the near term. Okay, guys, so that will be all for today's sharing. I want to try my luck for one more market. Let's try, let's try, and let's go. Sorry, oil. Just give me a while. Just try my luck, okay? Okay, I think my luck is running out. I cannot touch my screen anymore. Okay, oil itself, right, is at form a base at $57 to $58. And I think that oil will be recovering if, let's say, there's something bad going to happen in the long run. Yeah, we do see a bit of aggression between US and China, China and Japan, and then China to Taiwan. There's a bit of aggression recently on that. But okay, I cannot move anymore. And stop me out. All right, guys, thank you very much for listening to me today. I cannot move the chart anymore. I think I pushed my luck too much already. Okay, guys, thank you very much. Take care, and I'll see you online tomorrow. Tomorrow, there'll be no market talk because today US holiday. So tomorrow we rest. Okay? But I'll also give you some market charts in the morning through Telegram. Okay? Bye-bye, everybody.